folks, this is Stephen from ShareNavigator. Just a quick update on our US 500 trade. So I want to bring you to the futures. You can see here, futures are down 1%, but that really doesn't tell the whole story. You can see here, they were actually down a lot more. At one stage they were down over 2%, so it came down to 658. So our US 500 position is in what we call a temporary loss situation. But I just want to remind you of what our break-evens are, etc. So our break-even is down here at just below 6150. From where it currently is, it could actually fall about 8% and we'd still be in a profit on the trade between now and March the 31st. So while the loss looks, obviously it's not nice to look at this moment in time, that's the beauty of this strategy. So we give ourselves all this wiggle room for this trade to continue to go wrong. So no panic button just yet, but what I do want to reiterate is if we do get down to 6,300 on this, we won't wait any longer. We will buy ourselves out of this contract here and then roll out to the April contract. So a couple of other things just want to bring to your attention. You can see the volatility index has spiked, the VIX. Now it's at 32 at the moment, but it was up as high as just under 35 at one stage. Now, we'll keep monitoring this as well. If that remains over 35 for 2 or 3 days, we may have a different view on that trade. But right now, what we're saying is we're standing firm on the trade. That's the reason why we use this short put strategy, is to allow for market shocks like what we're seeing at this moment in time. And the main culprit for all of this is obviously the conflict in the Middle East and the fact that crude oil jumped over $100 a barrel. As you know, both the rhetoric from both sides is no surrender, all of that type of thing. Iran has elected a new leader and effectively the Strait of Hormuz is closed. Our view still remains it's in nobody's interest for this to be long and drawn out. And if it does become longer and drawn out, stocks will get even more discounted from here. So that's the one thing I will say. But I don't think it's in anybody's interest. I'd say all parties are looking for an off-ramp in the near future. I think that will bring oil prices down and the stock market will rally as a result. So we would actually see this sell-off in stocks as an opportunity to buy. So if you were looking to get involved in the S&P 500 in a more longer-term view, I wouldn't jump in just yet because I do think that if oil prices remain over $100 a barrel, I do think we come down further. But just on a longer term basis, I would use that then as an opportunity to buy into the index or some of the stocks that we've been watching here, are gone back on sale here at the moment. So I wouldn't be jumping in today to buy anything. But as soon as we hear that, there might be talks, I think at that stage then you start going long on the market then at that stage. So again, just a quick summary here. Doesn't look pretty at the moment for our position, down about 2.8%. Don't forget our portfolio is still up for the year. We're still up over 4%. That position may get even worse, but I want to just remind you, we've got 8% wiggle room here. This market can fall another 8% before we would be in trouble on March the 31st in this trade. We won't even let it get down there. If it gets to 6,300, we'll roll out and down. The only thing we're really a little bit we got to watch at the moment is this VIX. If it stays above 35 for 2 or 3 days in a row, then at that stage it might be a case of having to roll out and down at an earlier stage, and we'll keep you posted. Okay, this is an update from Stephen. Thanks and bye for now.